we are seeing the narrative and the focus shift to altcoins. But what I will say is it's not something we haven't seen before, right? We saw this in 2017. We saw this happen where Bitcoin cooled off a little bit and altcoins started going rampant. There was a point in time when I think Bitcoin was valued at around 41 billion in market cap,
Hmm.
and Ethereum was at about 34 billion. So it was very close to the market cap of Bitcoin. It was almost bigger than Bitcoin in 2017 at one point. And of course, this is when Bitcoin then started outpacing Ethereum again. But the point of the matter is that there will be periods where altcoins lead against Bitcoin in a bull cycle. And whether we're seeing the end of this cycle now and we're seeing the last push with altcoins, or we're going to see altcoins continue for months to go and then Bitcoin takes over again, that's a question we'll have to wait and see what happens with. But
Yeah.
I don't think I don't think altcoins are going to overtake Bitcoin, not this cycle anyway. That's my personal opinion. But I think Ethereum could. I'm not saying it will. I'm not in favor of it doing that or not doing that, but I think it's possible. Like you say, Ethereum's got so much on the back end that it can happen
Yeah.
if the market decides Ethereum's got more value.
Now they're saying, I think with Ethereum, it halves the supply at the end of the year or something like that.
It could be through the token burns that they're going to introduce. It's to do with the Ethereum proposal. So it's EIP 1559. It's called. I don't think they're just going to burn the supply for no reason, but you might be talking about EIP 1559, which is a upgrade to the Ethereum network, where they're trying to basically put a cap on the gas fees because the cost of using Ethereum is really high.
Yeah.
The miner's making a lot of money, but the average user can't use Ethereum. And so this proposal basically implements something where part of the fees are burned, and the fees are all paid in Ethereum. So as more people use Ethereum, more Ethereum is burned, and that could reduce the supply. But as for halving the supply, that wouldn't happen at all.
Okay.
I can't see any way that would be a thing.
Okay. Okay. Cool. So that's one of the things I'm trying to kind of figure out with my research is I'm seeing, I'm looking at circulating supply and I'm looking at it like it's the float in the stock market because it's the amount of coins out there. But a
Yeah.
lot of these coins have like built-in protocols that are not releasing the whole supply at once. Now, to
Yes.
me, that makes it really tricky to trade because if you're investing in something on the supplies being low right now, well, when that
Hmm.
supply adds to it, it's going to bring the price down most likely. I mean, anytime you introduce new money or currency or anything into the supply, it usually brings the price down. So, I mean, what is your thoughts on that? I'm sure you know a little bit more about it than me as far as how those tokenomics work.
Yeah, so it's all about the new projects that generally have more supply to come. A lot of existing ones do have more of the supply to come to market, but the newer ones have more supply coming quicker. And it's all to do with how these projects raise funds in the first place. So, uh, let's say you create a new currency or a new cryptocurrency or application on Ethereum, and you want to raise some capital. You basically sell tokens to investors, um, and then these tokens are locked for a certain amount of time. So you might onboard investors or venture capital investors who will pay X amount of money uh, to invest in the project, and they'll get X amount of tokens. Now, when the project launches, they'll only have so many of those tokens unlocked to begin with because they don't want these investors to sell their tokens onto the market right away. And so those tokens are slowly unlocked over time. And that is why the supply increases for a lot of these newer projects. It's all to do with the way they raise capital to begin with. Um, and they also keep a supply of the tokens for their own community fund or for marketing, or if they need to pay their developers. So obviously, these developers are paid with these tokens in a lot of cases. And so if you unlock it all at once, obviously it's going to have a negative effect right off the bat. And these projects need time to grow. And so they unlock the supply slowly, and that is why new projects have so many tokens being released so quickly.
Yeah, but like I said, doesn't that at least from all other investment standpoints, adding to the supply like that, has got to affect the price to the negative, right? Even
Yeah,
releasing some of it at a time, they're gonna as soon as they release, it's gonna dip. Now it could come back
it does.
up,
Yeah.
but you've got to be getting a dip out of that.
Absolutely. And they try and incentivize people to stake their tokens when they get unlocked, these investors, so then it doesn't have that sort of negative impact.
Mm-hmm.
But yes, especially if there's a big unlock in one go, it can have a negative impact on the price short term, or maybe long term if people lose faith. So it's difficult to value a project, or see if it's a good investment if you know there's tokens to be unlocked. So you have to actually go on to the Telegram groups of this project or on their blogs, or Medium
Discords, all
articles
that,
are really
yeah.
good. Yeah, and there will be a graphic you can find for the token release schedule. It follows a schedule. They don't just release it all of a sudden without telling
Okay, well
people when it's going to
that's
be.
good. I need to
Yeah,
look for that schedule because I don't want to be caught up in a day trade and all of a sudden then release a supply on me and drop the price
yeah, yeah,
because that would be my biggest concern is like being in the middle of a day trade. And I think that's the thing with it. Day trading, it doesn't really matter that much. You're just looking for, some spikes or bounces or little dip buying
yeah,
opportunities just to make some quick money during the day. But
definitely.
the long term, that's where I was concerned at. It wasn't really clear to me how that works to where it would make sense for the investors. But yeah, get the staking and I guess you get governance too with the tokens that you get. So there's a lot of benefits for certain
Yeah.
projects owning those tokens.
So with the staking, that is also why the circulating supply increases. Obviously, staking, as we know, you lock a lot of the tokens out of the circulating supply, but the rewards that are paid for staking for particular coins are paid in that coin. So if you stake Yearn Finance or YFI, you're paid Yearn Finance or YFI for
Right.
your staking reward. And if you stake Ethereum, you'll be paid in Ethereum. And that new Ethereum that's getting paid to the stakers is from the increase in the supply, in the circulating supply. So that's where some of the increase will actually come from.
Okay, so basically the big worry would be if everybody lost faith in the project and then pulled their staking and all of that and just dropped it. That's
Yeah,
more the that would be the biggest concern. Not
yeah,
I can see where the
definitely.
staking and holding because they do incentivize like I like Stormex because they if you hold it they have tiers of holding it and you get crypto back on your purchases and stuff. So that's like why would
Yeah,
you let it go if you're going to be making Stormex back all the time and you can I think on Voyager you can gain interest now on uh, store mix. So that's like kind of a double whammy there. So there's a lot of tokenomics that I like that
yeah,
are
nice.
incentivizing people to hold. So that's good.